Carefully review the disclaimer. I am a big fan of candle charts. I recently did a series of videos to explain the basics and covered various patterns. But let's be honest, identifying patterns amongst a series of candles is not so trivial, especially for beginners. Imagine if candle charts were simpler, a series of expanding and contracting candles clearly identifying trends and reversals. Heiken Ashi charts can do just that. And while they appear quite similar to candle charts, they are much easier to use for beginners and just as effective. Watch this video until the end, as I will demonstrate the use of Heiken Ashi charts using a step-by-step approach. Let us begin with understanding a Heiken Ashi candle formation and its difference from a normal candle. Heiken Ashi candle is created using information from two consecutive candles. This enables us to visualize a smoother output. For Heiken Ashi candles, open and close remain the same and indicate the highest and lowest prices achieved in the session for which the candle is to be created. The open point of a Heiken Ashi candle indicates the midpoint of previous candle. This is where the preceding candle plays a role. An important thing to note here is that as the open is not related to current session, you may end up with values for open price that are lower than the low price of the session, and we may end up with candles with no lower wick. This should not worry you, in fact, as we will learn later. This is a key feature that we will be looking for in our candles as it enables trend identification. Let's move to our final act, the close value of Heiken Ashi candle. This is calculated as the average of the four prices from the session. This in a way indicates the weighted mean of overall price range. We have now calculated the four key price points for a Heiken Ashi candle. Let's visualize the transformation from a normal candle to a Heiken Ashi candle. Let's have another look. Now, some food for thought for the keen viewers out there. As our open price is the average session price of previous candle and the close is the mean value of the four price points from current session, what if our current candle was a bearish one where opening and closing points were swapped? What would have been the resulting Heiken Ashi candle? Interesting, right? Without taking too much of your time, let's quickly visualize how the transformation to a Heiken Ashi candle would be under bearish conditions. Unlike candle charts, Heiken Ashi charts do not have the long range of candle patterns. The most important one is a bullish candle known as shaved bottom. This candle is characterized by a long candle body with no lower wick and a clear upper wick. This pattern is considered to be a strong bullish indicator as it shows that the price never dipped below the midpoint of preceding candle. When such a candle appears, there is a high likelihood that the bullish pattern will likely continue for a few sessions. As the bullish trend will start to weaken, the body of the candle will shorten and a lower wick will start appearing more often. This is a sign that the price is breaking below the midpoint of preceding candle and that trader confidence is weakening. The bearish counterpart of shaved bottom is a shaved top candle. This pattern carries the same behavior in bearish direction. The appearance of a shaved top candle is a sign that bearish trend is strong and will likely continue for a few sessions. As the bearish candle will start to weaken, we will see candles with smaller body and clear upper wicks. This is a sign that bearish trend is weakening and traders should apply caution. In a Heiken Ashi pattern, if you ever come across any form of doji and spinning top candle, it is a sign of immediate caution. Such a candle indicates indecision in the market, and that market will likely go sideways before breaking in either direction. High-risk traders will open positions during sideways markets, whereas a cautious investor should wait for at least a couple of bearish or bullish candles before entering a trade. Usually recommended to not make trading decisions on price charts alone and take a second confirmation. You can use a number of simple technical indicators such as moving average crossover, RSI, or stochastic oscillator to support your decision. Now that we know how Heiken Ashi candles are formed, let's use an example to see Heiken Ashi trend formations. We see a set of green candles forming up. An important thing to note is that all these candles have no lower wicks. This means that even the low of these sessions didn't breach the midpoint of preceding candles. This is usually a sign of bullish signal, which would likely continue. As expected, the bullish trend continues for another few sessions. Do note that we still don't see a lower wick, confirming that bullish trend may continue. Let's see another few sessions. We finally see a doji candle. This is a sign of market indecision. Luckily, we see another bullish candle, however, this time this candle has a lower wick. The presence of this lower pick shows slight weakening of trend. However, a trader shouldn't get worried yet. The trend continues, however. We hit another doji candle, now showing that the market is showing caution and perhaps traders are seeking further confirmations. Now we see two doji candles together. This raises an alarm. However, we shouldn't be worried yet as the price is holding and not showing a reversal or pullback. Next few sessions, the market is bullish again. Therefore, we can ignore the alarm we raised a few sessions ago. Now we have our first bearish candle. This should raise another alarm, however, as it was after a series of bullish candles and price didn't break significantly. We will apply caution. We see a number of doji candles confirming our alarms. However, price has not shown a downward movement yet. However, we should be cautious now, as doji candles with sideways movement is usually first sign of upcoming reversal or pullback. We see a bullish candle, so our alarm may have been just a slight correction. However, we see a lower wick in our candle. Not an encouraging sign. We see strong bullish trend in the next few sessions. Hence, we can ignore our previous alarm as price is breaking in bullish direction now. After another strong bullish run, market shows sideways movement once again. Now this is another point of caution for us. A few more sessions and we see a strong bearish candle. This is now a confirmation that next few sessions may be bearish. Some traders will decide to take profit at this point. After a few bearish sessions, we see another sideways formation. Perhaps what we witnessed was a marginal pullback. No major movement in the market yet. At this point, market can now break into any direction. Therefore, we should wait for a couple of bearish or bullish candles before we decide our next action. Looks like another pullback. However, better not be optimistic and wait for a clear sign.